Hey everyone, welcome back. Basic trading and strategy. Something interesting happened in the last 12 hours or so, and it's a perfect opportunity to show you how I took advantage of the situation and what actually happened. In the last videos, we have talked briefly about how when Bitcoin is going up in value, altcoins are generally going down. And here's the contributing factors. There's many contributing factors, but what is happening for the most part is two things. When you have novice alternative currency holders and people that don't know how to read charts, they don't know about trades, they literally don't know, okay? What's actually happening is they're getting scared and they're dumping their altcoins for Bitcoin because Bitcoin's going up. So what's actually happening with that is Bitcoin is receiving a lot of buyers' support, plus the media is getting involved saying, hey, look at this, Bitcoin's at an all-time high, it's going up, it's going up. And then all the other unintelligent people that are not educated on this are buying Bitcoin, right? And at a certain point, can't sustain itself anymore because at a certain point, people are going, look, it's almost $18,000. It's going over $18,000. Heck no, I'm not buying any more of this. And then it plummets. And as it plummets, we see an advantage for traders that are holding altcoins that bought them low because we see the altcoins coming back up. Now we're getting buyer support back into the altcoin as Bitcoin is tanking. They're coming back over. They're buying up the coins. The resources of the coins are rare, and we're driving up the value of the coins, thus creating profit opportunities. So before we get too far into that and I show you what I actually did, I'm going to talk about three specific characteristics that need to be non-existent in your trading. You can't have fear. What happened with this market right here where it just tanked and then it went up, people became fearful. They saw Bitcoin going up in value. They dumped their altcoins because they didn't want to lose more. They dumped them, they sold them, and exchanged it back for Bitcoin where they thought they were safe because it continued to go up in value. And then they ended up just losing out probably or breaking even at best because Bitcoin tanked again by over $3,500. So you have to look at that stuff. You cannot be fearful. You don't ever want to enter into a trade at the top of a market or buy at the top of a market. But even if you have, or even if you didn't buy anywhere near low, or even if you didn't buy at the lowest, being fearful is bad when it comes to trading, when it comes to cryptocurrencies, when it comes to alternative currencies. Because if you have a fear of loss, a fear of losing out, you are going to really hurt yourself more by changing your position. The fear of losing out has cost many successful, profitable trades from actually happening. So instead of selling that coin off, think for a second and go, okay, let's look at the market. Let's look at the trend of this coin and where it's heading in the future. Okay, yeah, maybe I entered wrong to make a profit right now, right here, this second, this minute, this week, or this month. But heck, do I think I'm going to be able to create a profit this year? What's the projections of this coin? What does it look like is going to be happening on this coin? Okay, let's keep it. Instead of cutting out and thinking you just need to cut your losses there, don't be fearful. Next thing, don't be greedy. See what happened here? Look at this. Look at this massive opportunity to sell and create some profit. Well, what if you were some idiot up here? Maybe not an idiot, but yeah, what if you were an idiot up here that thought, oh, I'm going to sell way up here, and it never happened? It never happened. You became overly greedy. Like maybe you sold a little bit in here, made some profit. You got really confident. You got super proud. You did a little bit of bragging, told your buddies, and then said, "Oh, I'm gonna make double what I just did. I'm gonna wait till it goes up to 8,000 Satoshi. It only goes up to 5, and now you look like more of an idiot." Don't be greedy. Impatience. You can't be impatient, even if you are okay with a long-term trade. You can't be impatient just because it didn't happen the month you thought it was going to happen, or the week, or the year, or the decade you thought it was going to happen. It will happen. Impatience has cost a lot of successful trades from happening that would have created a very profitable opportunity. So don't be fearful. Don't have the fear of loss. Don't be greedy. Don't be impatient. You guys should be writing this stuff down. So if you need to pause, don't be fearful. Don't have the fear of loss. Don't be greedy. Don't be impatient. The next thing, only trade when you have an advantage. Only trade when you have an advantage. Do you or do you not think I would have had an advantage if I bought in right here? Probably not, because I would have been able to buy in at 4,300 and sell at 5,000 if I had all my stuff lined up. That's not much of a profit. Only trade when you have an advantage, right? So it would have been a huge advantage if I had been able to buy down here and sell up here. Would have been a huge advantage. Now, what about here? What if I had bought at the top of this one right here where it was 31.89, 31.74, and it went up to 32.04? That's not more than 40% of a penny. There's no advantage there. Only trade when you have advantage. And there's a lot of advantage to be found when you can see volume exists. You see how a lot of these green and red bars are very short. They're very small. There's not a lot of volume going on there. But for these ones that are bigger, like this one and this one and this one and this one and this one, this one, especially this one, something is moving the market. And what actually happened here, let's look. So we've got the 5th, the 6th, the 7th, and then the 8th. The 5th and the 6th, we definitely have a bear market. The 7th, we have a huge turnaround. We even have some opportunities on the 8th of what is today. It looks like it might be going into a bear market again, but it's still relatively high compared to, November, this time last month, okay? So let's look at what happened between the 5th, the 6th, the 7th, and the 8th as I'm recording this. Note that Bitcoin currently is at $15,469. Let's go over to the Bitcoin chart here. So here we have the 5th, the 6th, the 7th, the 8th, 9th, so on. Look at this, very stable. It's kind of sustained itself right in here. It's about $11,000, 11.1, 11.4. It's kind of sustained itself. But on the 5th, we go from 11.59 to 11.9, so we jump up and then we kind of have a breakout. We go from 11.9 all the way up to 18.4. 18.3, excuse me. By the 8th, we're at 18.3. On the 7th, we are well on our way up to 18.3. Let's go back over to this chart. What happened? What started happening on the 5th started going down as Bitcoin went up. Started going more down as Bitcoin continued going up. And then Bitcoin peaked between the 7th and the 8th. And the alt started to tank on the 8th after Bitcoin peaked. But when Bitcoin peaked, it received much less buyer support because buyers said, hey, this is pricey. We're not buying this anymore. Hey, maybe we screwed up. We should go back over to altcoins. Hey, we don't like what the media said now. We listened to them. We've invested. Our money's not going anywhere. We're losing money. Oh, gosh, the fear of losing out. They come back over. They invest in the altcoins again. The buyers drive up the market in the altcoins when they see that Bitcoin has gotten to the point where it is just so expensive, doesn't make sense anymore. Bitcoin's on a bubble. It can't sustain itself. You have tons of buyer support happening in here. Oh my gosh, it's going up, it's going up, it's going up. It's breaking an all-time record. Fox News comes in, media comes in, all the crypto forums come in. It's going way up, it's going way up. All the idiots and unintelligent people that are uneducated in this continue to buy the coin, continue to buy it up and buy it up and buy it. And it reaches a historical high. It's never been this high. It's receiving no more buyer support. Buyers are going at this point, okay, this is crazy. This is crazy. I can't afford more. I'm not dumping 18,200 on a Bitcoin. I'm not spending 9,100 on half a Bitcoin. And it starts to plummet. And as it plummets, all these same idiots, and maybe some different idiots, come back over to the alt exchanges. And the media continue to say Bitcoin's at an all-time high. And what ends up happening is they come back over to the altcoins where we have now had a massive opportunity to buy low because the market went away from the altcoins and the support moved to the Bitcoin. So the support moved away from the altcoins and the support from the buyers moved toward the Bitcoins. And what ended up happening, because it stopped receiving support in here, it got devalued. All the altcoins were available now. They were not being bought. There were tons being sold at this point. Wasn't receiving any more buyer support. All the altcoin holders sold out, devaluing the coin because the supply was greater, the availability was greater, and all the experienced traders bought this up because they sensed something coming. They knew Bitcoin was on a bubble. Bitcoin starts to go down, and this just goes way up. So what did Ben do? Ben took advantage of this situation, and I'm going to show you what I took advantage of here. But before I do that, a couple points to bring up. When you are entering a trade, as I said, always and only trade when you have leverage. Only enter a trade when you have leverage, and only exit a trade if you are going to make money. Period. Don't have the fear of loss. Don't be greedy about making too much money, and don't be impatient if you gotta wait a little bit or it doesn't happen when you wanted it to happen, okay? Only enter a trade when you have leverage. Only exit when you're going to make money, and never buy at the top of a market. It's a very simple algorithm. Buy low, sell high. And we're going to go ahead and go over that very in depth and show you some patterns that you can recognize later on in our advanced trading strategies in our later videos. It's very simple. Buy low, sell high. Now, the next thing I'm going to show you is a strategy that I often use, and I did use it here today. So we're going to go back over to orders and take a look at this. And I did bring this up earlier while this is loading, guys. But when you are exchanging alternative currencies and you're buying low and you're selling high, you're doing it for one of two reasons. You are investing in an alternative currency low, selling it high, and then when you sell it, you're getting paid back in Bitcoin for the sole purpose of building up an accumulation of Bitcoin. You're trying to stockpile Bitcoin. That is the first reason. The second reason is you're using a multitude or a few of different alternative currencies in efforts to accumulate very well-established alternative currencies that are moving in the same trend Bitcoin is, such as Ethereum, such as Dash, and Litecoin, for example. ETH, LTC, and Dash, DASH. Those are coins that are moving in an upward trend. Dash, a year ago, $35. Today, $600. Ethereum, a year ago, $7. Today, $120. Litecoin, $8, $9, over $100 now. Okay, they're all moving in that same trend. So a lot of people will actually utilize trading to stack altcoins where, you know, maybe they have a trade, they're making $300-$400 a trade, and they're doing it a few times a week. They got a couple $1,000s running through in profitable trades. They're able to net $8,000 a month, and right now that's allowing them to be able to get about 80 Litecoin per month. And who knows, maybe 3-4 months from now, Litecoin is now worth $400 a piece, and they now have whatever, $32,000 of Litecoin, $60,000 of Litecoin if they keep trading. So you got those two strategies for Bitcoin accumulation or for well-established Bitcoin trending alternative currencies. So let's look at this. So the chart that I just showed you in the coin we were on was XEM, all right? You can see that I had a couple buy orders and I had a couple sell orders. So let's look at this. On the 4th of this month here, I had an opportunity to buy XEM at 2,450 Satoshi. On the 6th, I had an opportunity to buy at 2,254 Satoshi. And I think that day it went down to like 21. And on the 4th, it went down to like 2380. So I did pretty good on those. And those were both very low relative to the rest of the market. And what I identified is what was actually happening in the market on those days. And once again, you guys are going to be able to read charts like crazy later, because I'm going to actually show you very specific patterns that you'll be able to pick apart in all markets and all charts. And you'll be able to take those patterns by what I teach you, because these patterns, they're signals. They are suggestions towards what is happening in the future or going to happen in the next coming minutes, hours, or days. And if you can simply recognize these patterns, you're going to be able to have a very probable cause to enter a trade knowing, okay, well, right now it's about to go into a bull market. It's about to have a breakaway. It's about to go up immensely. I got to enter right now. And you'll know by recognizing these patterns. Anyways, I did recognize these patterns, which you will learn about soon. So 2,450 Satoshi, 2,254 Satoshi. I spent, you can see right here, 22 plus 1, 9. So I spent 0.041, 0.042 for a total of, you can see here, like 1,793 coins, something like that. 1,793 coins is what that is, or 88, 98, 1,800 coins. And then you can see I sold here. I had an opportunity to sell at 35.30 and another opportunity to sell at 42.99. One of the other things you're going to learn later, guys, is about setting up notifications for yourself to increase your profits, or better yet, to notify you when a coin is coming to an all-time low where you want to have an opportunity to buy, or better yet, to notify you if it's going up past a certain point and approaching the sell order that you are waiting to fill. For example, I have a sell order placed on this at 7,000 Satoshi. Well, I have a notification set to me for 5,500, because at 5,500, I'm still making a lot. So the strategy that I typically use, and then I'm going to suggest in every single case, is a 50-50 strategy. And what that means is, say I have 2,000 XEM coins. I'm going to use 50% of that for short-term trades and short-term profits, and I'm going to use 50% for long-term trades and long-term profits. And here's why. If I had put all my eggs in one basket and sold all 1,800 of my XEM coins right now, and I made a huge profit, I would have nothing left. What if, just what if, that coin continued to go up in value and it doubled past what I already made? What if that happened? So say I profited 20 cents on each coin. I sold all of them. I blew it all out, sold all of them. And then 27 minutes later, that coin, if I still had any left, I would have profited 48 cents per coin. And I'm sitting here going, oh my gosh, I was stupid. At least if I use a 50-50 strategy, I'm still going to have 1,000 coins left over to profit 48 cents per coin. So if I sold all of it, I shorted myself on another $480 of profit. But when I sold it before, I only profited $20. So you're going to be able to have more leverage if you use a short-term, long-term strategy. What I typically do is I will use half for short-term trades, and then I'll keep half from an investment standpoint, where I'm almost forgetting about the actual coin that I have, past the fact that what if it goes up to 10,000 Satoshi and I can make tons of money. So you want to use a 50-50 strategy when trading. 50% for short-term profits, 50% for long-term profits. The other thing is, what happens if it ends up just tanking and you sold all of your coin and it tanks and you don't have the ability to buy more because you've already invested it in other coins? So it's always good to have a 50-50 to be able to have more leverage whether it goes up or it goes down. That way you have the ability to also have an exit strategy, which is very important. You need to have an exit strategy. So here you can see I had 2 buy orders in, total about 1,800 coins. Now I sold 1,400 of them, right? So I still have about 398.57 left. I sold about 1,300 of them is what I sold. I sold one order at 35.30 Satoshi and one at 42.99. Well, I already did the math for you guys so you wouldn't have to. But what this ended up doing for me is I grossed 0.05357 Bitcoin. So I grossed a pretty dang good amount. I grossed 0.05357 Bitcoin. Now, based on what I spent for this and what I spent for this, which is a total of like 1,800 coins, and being as I only sold 1,300, you have to subtract a portion of this out. But at the end of the day, I had a 0.02 Bitcoin profit. And if we go to Bitcoin value and we look that in, I made 0.02 Bitcoin today on this trade. 0.02 Bitcoin. 0.02. I made $316.49 on this trade today. That's what I made. Just in one day, spending literally less than 2 minutes clicking a couple buttons, I made that much of a profit. $316.49 profit. And you can see, guys, I didn't play with a whole bunch of coin. I spent 0.042. 0.042 Bitcoin is what I invested into XEM. Not that much. Look at this, 0.042. So I was invested $664 into this, and I made 316. I literally had a 50% return on my investment, and I didn't sell all of my coins. I suppose you could have looked at this and gone, well, okay, if he sold all of his coins, I would have made, let's see, I profited 20 cents on each coin, so I have 400 more coins, 20 cents. I would have made $80 more. Like, I would have had like a 60% return on my investment, and it's a minimal investment. I mean, if you were going to make $316 for every $600 you spent, wouldn't you? And what if you could do that every day? That's 5 figures per month, guys. So This is something that you really want to start to pay attention to. Now, lastly, before we get into the next video, what are the different types of trades? There actually are a few different types of trades, and I'm going to show you. So types of trades. You have what we call scalping, seeking opportunities on the lows and highs throughout the day or week for short-term profits. So the trading type that I just showed you, what I did today, what I did in the last couple days by seeing an opportunity to buy at a low point in the last couple days, and then seeing a couple opportunities to sell at a high point, that would be called scalping, seeking opportunities on the lows and highs throughout the day or week for short-term profits. Then there's swing, holding a specific position in the trade in anticipation of a great bull market profit. Now, this could be days, weeks, or months. So you're looking at the markets, you're doing some market research, you're looking at the resistance, you're looking at the support and the Bollinger Bands. These are actually things we're going to be talking about in the next video. And you're developing basically a hypothesis, a theory of what's going to be happening. A very well-educated guess, but it's better than a guess because you're so educated at analyzing these charts and coin research, which we'll also be talking about, that you're able to put an educated buy order in or enter into the trade at a very good point with anticipation of a great bull market where you're going to be able to make profits. This could take days, weeks, or months. And then there's arbitrage, which is actually a pretty creative type of trade. And what this means is buying on one exchange at a lower price, because oftentimes, like you take Bittrex and Poloniex, for example, what happens often is a coin might be available on Bittrex at a lower price than what it is on Poloniex, but it's selling at a higher price than it is on Bittrex. So all of a sudden the market goes up, you've invested into this coin on Bittrex, you're looking at Poloniex and Bittrex right when you're wanting to make that trade, and you see that Poloniex is actually selling that coin a little bit higher, maybe a couple cents per coin, and you own 2 million of them. That's worth it. So you're actually taking the coins that you have purchased that you own for less on one exchange, and you're actually sending it over to that coin's wallet on another exchange and selling it on that other exchange. And that's a much more advanced strategy. Even I don't do that very often, but it can be done. And then we have investing. Basically, investing, holding, and almost forgetting about it. For example, if you bought Bitcoin back in 2009 at 8 cents and you were able to sell at $19,000 in 2017, you basically invested in it, went through college, got a degree, and then realized, oh gosh, maybe I don't need that degree anymore and I don't like getting paid $10 an hour. And boom, you make a 18,999.92% profit. Doesn't sound too bad to me, guys. I'll see you in the next video where we're going to talk about Bollinger Bands, resistance, and support.